Hello everyone. This is the pre-market report video for today, March 10th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Nifty opened a gap up of 15 points, but throughout the day, it continues to slide and closed near the day's low. 13 out of 14 major sectors ended in negative. Auto lost the most, I don't know why, but it lost nearly 2%, followed by IT. Here, I'm guessing that the larger central bank interest rate will increase the interest rate for the vehicle loan, which subsequently reduces the sales volume. Metal was the only major sector that closed positive due to the demand increase expectation from China. However, overall the picture yesterday was not that bad. The advance return ratio was around 2.5:3, which means for 3 stocks declined, 2.5 stocks were advanced. And after 3 days of buying, FIS turns net sellers, the net sold shares worth approximately 560 crore rupees and DIs net bought shares worth approximately just 40 crore rupees. So that's what happened yesterday in the Indian market. Now let's discuss what happened yesterday in the US market. Basically, before last night, in this week alone, Dow Jones, S&P 500 and Nasdaq dropped nearly 2 to 3%. Why? Fed chairman spoke hawkishly and thus investors thinks and expected a longer and larger rate hike cycle, and thus this week that created a negative sentiment in the US market and all around the world. But last night the issue was entirely different. There is a major bank in US called Silicon Valley Bank, and it is one of the largest bank in US located in California, who mainly dealt their financials with startup and tech. Generally, before last year, during the startup tech boom period, 2017 to 2021, there were a lot of venture capitalists who funds those startups. And most of these US-based startup money was deposited in this bank. And this bank deposited all those money in the long-term US Treasury bonds and other foreign government securities. Over $26 billion on US bonds and around over $90 billion in the foreign government bonds. As we know now, all those long-term bond interest rates were increased significantly. I hope I'm not confusing. All the tech companies deposited their money in the bank, and the Silicon Valley Bank deposited those money in various government bonds during the low interest rate period. So now this bank is in the position of paying more for its depositors due to the recent high interest rate made them to sell near $21 billion worth of government bonds. And because of this interest rate difference, they got the loss of near $1.8 billion in the balance sheet. To clean up those balance sheet mess, they announced the fresh equity sale of near $2.25 billion. This didn't go well with the investors and made the stock to fall over 60% in one single day. It's not just that, this puts pressure on all banking and tech stocks. For example, Bank of America, JP Morgan and Wells Fargo all fell over 5% in one single session. In the end, Dow Jones decreased by 1.66%, S&P 500 down by 1.85% and Nasdaq crashed over 2%. US VIX increased over 18% and moved near 22.5. In terms of tech stocks, Netflix and Tesla crashed over 4% and all others down by 1 to 2%. Then about dollar index, it dropped marginally and moved closer to 105. Regarding 10-year Treasury bond yield, because of the extra long-term bond availability, it dropped near 2% to 3.9%. But the 2-year bond value increased crazy and made the 10-2 yield spread to over 108 basis points. In terms of oil, again all this puts pressure and pushed it further down. For example, at the time of this video, WTI crude oil was traded at $75.5 per barrel and Brent crude oil was traded at $81.5 per barrel. Coming to Indian ADR in US market, it was a complete disaster. Yesterday in Indian market, HDFC Bank closed positive, but in US, the ADR crashed near 2.5%. ICICI Bank was worse, it dropped over 3%. Then both the IT stocks crashed around 2%. Then about SX Nifty, at 3 AM Indian Standard Time, it closed at 17,529. Equating it with the spot market, it's kind of indicating the 100 points gap down opening. Here, please note, if we equate the US market, it's kind of showing 250 points negative Nifty. And if we equate the ADR, then it's indicating near 400 points negative opening. Enough about the world market, let's see the Indian market related info. Apart from the banking weakness in the US market, there was another strong reason yesterday why HDFC Bank closed significantly negative of over 2.5% in the US market, despite it closed positive in the Indian market. Anyway, coming to reason, yesterday after market hours, some hacker named Colonel Ware released the personal information of around 6 lakh HDFC Bank customers in some online website. The leak contains all those information such as their full names with middle names included, date of birth, age, phone numbers, personal emails, marriage status, literally everything. However, HDFC Bank denied the leak. But that doesn't stop the negative stock market reaction in the US market, so I expect the same in Indian market today. Then coming to the second info, yesterday Reliance Retail relaunched the Campa soft drinks in 3 different flavors. I mean, after 22 long year, Campa brand back to the Indian market. And also, Reliance Jio bought the US-based communication equipment maker called Mimosa Network for $60 million US. Mimosa Network has product portfolio of point-to-point and point-to-multi-point products for Wi-Fi 5 and the newer Wi-Fi 6. Anyway, as a summary, it was a disastrous day for US market and Indian ADR. Then yesterday's Nifty indicating the gap down of near 100 points. Let's see. Clearly, there is a huge weakness in banking stock, but Reliance looks somewhat positive and I am planning to buy 10 Reliance stock today. Just a disclaimer, please don't buy just because I am buying and I am not a SEBI registered advisor. So please consult your own financial advisor. Now coming to technical, on daily chart, Nifty forms a long bearish opening Marubozu candle. Generally, this candle can be a both indicator, I mean an inclining trend continuation signal or a final large sale before the trend reversal. Its role depends on the previous candles. So now considering the previous candles, it forms a bearish engulf pattern, which means indicating more further downside weakness. In terms of moving average, on Wednesday closing, 8 of them were showing buy signal, now only 2, all others turns sell signal. Even 200-day exponential moving average indicating the sell now as Nifty trade line drops below. So as a moving average summary, from buy signal turns into a strong sell signal. However, in case of technical indicator summary, it's still a neutral signal. Then coming to Bank Nifty, it forms a bearish Harami candlestick pattern. It's also a bearish reversal or a bearish continuation signal. Anyway, at present, Bank Nifty is kind of stuck in the range between 41,000 and 42,000. So breaking the either side will set the direction. Then coming to moving average and technical indicator summary, from strong buy on day before yesterday, it dropped to just buy signal. Moving on, from pivot chart for Nifty, at present the immediate support is present at around 17,520 and strong support is at 17,445. On the higher side, immediate resistance to break is at 17,720. In terms of Bank Nifty, the support is present at around 41,100 whereas the resistance is at 41,820. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the videos. It will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.